Hello, good evening, everyone, and thank you for attending tonight's webinar. And it is my pleasure to welcome you to the session. My name is Richard, and I'll be your host today. Now, if you are attending our webinar for the very first time, you might want to join our Telegram channel by searching for Online Traders Club in Telegram, and you can join the channel. It's not a chat group, so it will not be noisy. All right, so let me now begin by introducing our organizer, which is Online Traders Club Singapore, and that is OTCS for short. And we are a non-profit society formed in 2005, and we are a community of traders and investors here in Singapore. And to me, OTCS is a place where we network, share, and learn, and we do it through a series of workshops and webinars, courses, and our library. For workshops and webinars, we aim to have about 6 to 10 a year, and it is free for our members. These are the good old days before COVID. Before we had webinars, we had seminars. And this is also another bigger scale event that we held at SGX Auditorium. And this one we hold it at the NTUC auditorium, function room actually. All right, and for courses, we aim to have about 2 to 4 a year. And normally we will do a group buy with the trainers to get a better price for our members. As for our library, we have about $6,000 worth of resources that is held physically in one of our committee members' office. But since COVID, the library has been closed for visitors. But if you have interest in any of the items, and if you are our member, you can check out this page on our website and find out what the items are and follow the instructions there to see how to coordinate to borrow them. And again, OTCS is a place where we network, share, and learn, and we do it through a series of workshops, webinars, courses, and our library. And how much is it to join a year? The normal fee is $120 a year, but for a limited time, it is $60. And for even more limited time, it is free. Since COVID, we have went online and we have made it free for anyone to join. And to learn more about our club, please visit onlinetradersclub.org. And for those of you who have just joined us, if you'd like to be kept posted of our upcoming webinars and seminars, please join our Telegram channel by searching for Online Traders Club in Telegram. Or you can join our email mailing list by going to our website and choose mailing lists. And if you are watching us on YouTube, please don't forget to like, subscribe, and share. And I'd like to take this opportunity to thank our OTCS crew. They are our unsung heroes working behind the scenes during our physical workshops who help us out by distributing food and also cleaning up after the session. So you know who you are. Thank you very much for helping out. And now for the very important slide, the disclaimer. Now, you are responsible for your own profits and losses. The speaker's opinions are their own and does not represent OTCS's opinions. OTCS is office holders, associates, sponsors are not responsible nor liable for your losses. OTCS events are for educational purposes only and should not be construed as advice. And if you are in doubt, please seek professional help. And later on during the session, should you have any questions, please type into the chat box on the bottom right of the screen if you're watching us on the desktop computer. If you're watching us on a mobile device, you might need to scroll up or down to type in your questions. And at the end of the session, I will post the questions to the speaker on your behalf during the Q&A session. All right, and without further ado, let me now share with you tonight's topic, and that is cash flow maximization and value investing using simple short puts, which is a option strategy. And it is our honor and privilege to welcome a practitioner who trades his own account and also share how he trades his own account with his students, Mr. Ke Siong Yo to share with us more on this topic. Siong Yo, over to you.
Okay, thank you very much, Richard, for your very kind introduction. Just want to do an admin check. Everybody can hear, right?
Yes,
All
I can
good.
hear you.
Okay, great. Okay, so what I'll do now is I'll just do what is necessary. I'll just
Stop
let me
sharing.
go to. Okay, you stop sharing, right? I'm going to share my presentation.
Yes, you will
Okay,
do the
moving.
stop sharing.
Okay, let me. Okay, let's see. Okay, so
Plus sign below the logo, you click on the plus sign and there will
plus.
be
Oh yeah, yes,
sharing.
yes, plus. So this will be. What is it?
The plus sign is below the logo on the top left.
Yes. So what is the
Stop sharing.
stop sharing? Okay.
Okay, great.
All right.
Yes,
So
so you
I
click the
will
plus sign again and you can
okay
start share screen.
share screen. Thank you, Richard.
No
Sorry.
problem. No worries.
This is a new this is a pretty new what do you call platform that I've been exposed to. So let me go to
Chrome may ask you for permission, so you will need to grant it permission. And then you can choose which screen you want to share, the entire screen.
entire screen. Yes, I think it will be easier. Okay. Okay, so entire screen. So what I'll do is I'll toggle to PowerPoint now and turn on the presentation mode. Okay, good evening,
You can
everybody, once again.
click on the hide at the floating toolbar. There's a floating
Okay.
bar in the
Oh,
middle.
hide.
Bottom.
Yes. Okay, great.
So there's a hide. Okay, done.
Done.
You're
Yes.
all good to go.
Thank you very much. Thank you for your guidance. Okay, thank you, Richard, once again. And once again, good evening, everybody. Really happy and honored to be here at Richard's invitation. So when I got this invite, I was actually asking myself, actually, what do I have to offer to this group that you don't already know? Because I understand from Richard that by and large, this community are already practitioners of options investing, or some of you are maybe even more seasoned than me. So I'm just going to keep it very simple, very direct, very succinct, and I'm just going to just go straight to the point and just tell you what has worked for me so far, what has not worked for me so far, and I'll just borrow some of this standard phrases from all these all the kung fu movies that you see, all these martial artists, whenever they meet each other, what they commonly say is 献丑了. Okay, I'm sorry if I'm sharing what you already know, and 多多指教. Okay, right. So as the title said, I'm just going to talk about what strategies that I predominantly use in option trading. Why I'm going to also focus on the why part, because if you know this author Simon Sinek, I think it's on point whenever he says start with why. Always start with why am I doing this. So I'm using options for a very specific purpose. I am using options to generate monthly income for myself. So I have to be very clear about why I do a certain strategy and what purpose does it serve. So more of that in shortly. Let me start with a very quick intro about myself. So I call myself a corporate warrior, a former corporate warrior, 23, 24 years of corporate experience. And now I'm a solopreneur, one-man show. So I always joke with people that I actually have as a solopreneur, very chum. Need to do 3 jobs just to bring in the bacon. The first full-time job is a nighttime job. So that's where all the action happens in the, dealing in the US stock market. Then I have this full-time day job, which is as a corporate trainer with NTUC Learning Hub. And my secondary job, which I do on a part-time basis, is on and off. I run what they call investment coaching programs, teaching retail investors who are interested to know interested to start on their options investing journey. So I teach them how to get into the game and start their journey. So that's a very quick overview about myself, just a little bit more with a bit more visuals. So this is me formerly when I was in corporate. So before I turned into a full-time options investor, this was what I was doing. Graduated from university in 1994. Then over the course of the next 24 years, had the fortune or misfortune, depending on how you see it, of working in big and small companies, global MNCs, SMEs, mainly private sector enterprises, and in many different type of jobs. So if you can see, if you just take a quick glance, the roles that I've gone through are mainly non-finance. So it's logistics, transportation, sales, marketing, consulting, and whatever. But you don't see finance here. That's because in 2017 I decided, rather than continue like this, and living life like a zombie, I needed to do something different. And what was the trigger was this very interesting. I was the face of this product that I was managing back during that time with Singapore Press Holdings, when it was still a profitable business before it just went under. Okay, so I was the face of this ST701 Jobs. Now it's been rebranded as ST Jobs. So I was the head of ST Jobs then. So we ran a full page ad back in Straits Times, and the caption was very cryptic. Get my life. I needed to get my life back. Looking at this very cui person in the photo, which I suspect is also quite reflective of a lot of us who are holding corporate jobs, day jobs. We're always struggling, chasing after KPIs and whatnot, right? And we end up working more than what we need to, putting more hours than we need to in office. We don't get to see families, don't get to see kids. So there came a time in 2017 was the straw that broke my camel's back. So I said, hey, I cannot go on like this. I needed to get my life back. So I then decided to experiment on something different. What could potentially work for me? So I tried quite a lot of things. So I had to look for a solution. I cannot just throw everything down, just quit without a job, right? So whatever solution I looked for, and that was the time when I decided to pivot into finance. So compared to many of you actually in the audience, I would say that I'm actually still, maybe compared to some of you, still not very seasoned in this game yet, but it's okay. I mean, I'm happy for what I am, and I'm happy doing what I'm doing now, and I'm kind of in a position to also be able to influence and help to influence some of my students to strive for a better financial outcome for themselves too. So the solution I had to look for had to satisfy these three criteria. I had to be able to generate consistent income stream. So this is part of the why, the very important why. Why am I doing certain option strategies? And investing comes with risk. Let's not have any illusions about it. But the risk must be something that I can accept or manage. So for me, risk management is part of my DNA. I'm very focused on the risk mitigating part. And it has to be a system where, okay, it cannot be like this month I can bring I money to buy rice to feed my family rice. Next month, then I tell my children, sorry, can only eat roti, can only eat bread, cannot be, right. So it has to be a system that can work in both bull and bear market conditions. So with these three criteria in mind, I started on my finance pivot and I started on my investing journey. In fact, I didn't start into options immediately. I experimented with quite a lot of things. So first 3 to 4 years were really quite painful. So I'm just thankful, I'm just grateful to my missus for supporting me on this journey. And despite it not being very smooth, but it was important, it was very valuable, it was very momentous time period for me in terms of learning what not to do, what are the mistakes made, and how to avoid making them. And these are also the all the good things that I'm actually teaching and imparting to my students. Okay, so as a result of this, I develop my own process, because investing, like it or not, it is really about having a process, a system, right? So my own system, I shamelessly call it the 4-step FATS. Okay, in this day and age where we say, hey, politically not correctly, how can we use the word FATS? Don't care lah. FATS. I don't mind having a lot of FATS in my wallet. I don't mind having a lot of FATS in my trading account. I'm sure you probably don't mind too. So FATS is just a simple acronym for that. Fundamentally, what kind of investor I am, what kind of sector or industry do I like, and that leads me to find out which are the stocks that fit my kind of investment profile, and then I will use TA to decide what price to enter, what price to get out. This forms the basis of deciding what is the strike price of my option strategy too. And of course, the most important, which is what we're here for today, the strategy that I predominantly use to enter trades. What are the option strategies that I use? In fact, I will just say that for myself, what works for me is actually very simple. I don't go into things that are complicated. As we know, in the environment out there, there are easily 23, and my last count, there are about 23 option strategies, simple and complex ones. So I tend to focus on the simple one: long call, short call, long put, short put. That's it. And maybe just one advance, which is the vertical credit spread. It can be bull put spread or bear call spread. That's it. And predominantly, I use short puts and short calls. I will explain what's my rationale. So I focus only on the 2 or 3. I keep my life simple. I don't complicate things for myself. So as I said, what are the 3 option basic ones that I use? Selling calls, and to this I will also add I will sell covered calls. It has to be covered calls. Long time ago, I had this. Remember, I showed one slide. I said that the first 3 to 4 years was spent on paying tuition fees. Right? One of the most painful tuition fees I paid was losing $50,000 in one night, just doing naked short calls on Tesla. So it was painful. So I vowed to myself, never again, never repeat that kind of mistake. And I emphasize ad nauseum, emphasize to death to my students. If you want to also experience what it feels like to lose 50,000 USD in one night, then go ahead and do naked calls, but no more. Okay, so sorry, covered calls, selling covered calls. Buying calls is okay. So my portfolio mix today is roughly something like this. I have very little to none of buying call positions. I have about 30% of my options portfolio that's in selling covered calls, short covered calls, about 50 to 60% in short puts, and the remaining, if any, in vertical credit spreads. Okay, so I'll just show a little bit more in a short while, and I'd like to just share what is my performance, my report card so far. So let me just zoom in a little bit so that everybody can see better. Yeah? So this is one of my accounts. I don't just manage my own account. I also manage for my family, my missus, and also my older kids. So I'm trying to get them started on this journey, because the sooner they start, they have the advantage of age and time, right? So let compounding work for them. So this is one of my accounts. I use both Tiger as well as IB, Interactive Broker. But for myself, my own predominant account is IB. For my missus, she is more a mobile first kind of person. So she's more inclined towards Tiger. So this Tiger, I'm happy to say that, not too shabby. Okay. My past 6 months performance is about this 32%. So on annualized basis, it's about 65. Okay, but there's also a caveat. As we all know that the market, Mr. Market, is under no obligation to ensure that we always are profitable, right? So last month, I think for many of you as well. So last month, it was quite a torrid time for me, and my portfolio suffered as suffered a little. So this is my return for last month. Okay, so let there be no illusions. It is not always soon, but my my modus operandi is this: on a long-term basis, on a 6-month, 12-month basis, as long as I have more wins than losses, that should put me in a good position. So I'm kind of expecting that it will never be 100% home run, that kind of situation. There will be times where I will have to suffer. I'll have to face some setbacks, and last 2 weeks was that kind of time. And in fact, the last 2 weeks, what really undid me was really on the tech stocks, because I emphasize a lot. I like tech stocks a lot. So, and as I said, my objective is very clear. I'm doing this to earn premiums. Premiums to me is cash flow. It's just like cash coming into my bank account. I'm relying on options trading as a primary cash or income generator. So I will tend to focus more on tech stocks, or tech stocks that are maybe a little bit more volatile, because volatility is a good friend to options, right? I'm sure we all know that. So, and while Nvidia, the likes of Nvidia, ARM, Roku, all this, Square, they've worked well for me, but it's just that the last 2 weeks they have been a source of pain for me. But it is what it is. Okay, so my preferred type of trade. So I'll just share with you what is my whole basis. I hold the thesis that we are still pretty much in a bull market environment. At least it seems to be the case for now. My thesis has not been so-called disputed yet. I do think that we are still in the midst of a 10-year bull market cycle. So I'm going to make the best use of this 10 years. But within these 10 years, as we have evidence in the last 2 weeks, we are going to see short-term pullbacks. We have to expect to see short-term pullbacks. And probably in the course of the next few weeks to come, especially with all this uncertainty about rate hikes, job, economic performance, right? In fact, today and tomorrow is the FOMC, so we don't know what's going to happen. So we're just gonna make sure we do what is necessary in terms of risk management. And I would say that also based on the last 2 weeks, the pullbacks could be more violent potentially also more violent. We should expect to see more violent kind of pullbacks happening in the near term. Okay, so henceforth, I'm still going to focus on just two main strats. Okay, selling calls, and I emphasize again, selling covered calls. Why covered calls? Why do I use sell calls? Because I use options as a means to so-called as an approach to value investing, right? I use options to get a sign on stocks that are at a better price, a better value as compared to buying it outright from the market today. So if I do a weekly or monthly option, I sell I do a short put on this particular stock that I don't mind owning, and if really the stock price drops on expiry date, I get a sign, I buy at a lower price. Happy is a happy outcome. So once I own the stock, what do? I do not believe in passively waiting for the stock to let's say declare a dividend once every quarter whenever they announce their earnings. In fact, I will take an active approach. So I will just do a sell call. If I own 100 shares of a particular stock, then I'll just do a sell. I'll sell one contract on a call. So on stocks that I own, the primary aim is really to generate cash flow actively. So this active system that I'm adopting is a very active posture. And the secondary aim is I will also look for opportunity to offload, to sell these stocks with capital gains. Okay, so if I own a particular stock, and if I were to buy at $50, I'll do a sell call. Minimally, I'll sell it at the price that I got it for. But ideally, and in fact, most of the time, I will try to sell at a higher price, generate cash flow in terms of premium, even though it's a little bit of money, but it's still money. And then if let's say I get a sign, have to sell, release, surrender the stock, by all means take. I'll tell the market, please take. I happily surrender, because I'm I've sort of positioned myself to be able to enjoy capital gains in that situation anyway. So that's selling covered calls for me. Selling naked puts, I am not shy to say that I sell a lot on it. In fact, if you remember, 50 to 60% of my options portfolio is on short puts. So for stocks that I am very open to owning, if it makes sense, I will sell at the money or close to at the money. But I will say this, typically I will sell with a little bit further away out of the money, because you never know. Let's say the stock price is here. This is the current stock price, right? You never know 1 month later whether it's going to drop. So I would rather just sell it at with a little bit of margin of safety. So margin of safety, just in case it drops, then I don't have to pay so high a price. I can still get it at even cheaper, or what we say in Singapore, cheaper than cheaper is cheaper, right? So I sell it at a even better. I'll be able to get it, or I'll have to buy at a cheaper price, which is a good outcome for me anyway. Okay, so and also the other consideration is for stocks that are more volatile. Think of this. I'm sure every one of us can agree with this. Or if you want even more volatile stock, how about micro strategy? If any of you are aware or into this, okay, personally, this is as far as I go. I'm not into micro strategy. I will just state it up front. Okay, so Nvidia is probably the boundary, the OP marker for me already. No, nothing further than that. Okay, so even the likes of other what they call semicon, like ASML. ASML is even ASML also around the same price as Nvidia. Okay, so so that these are just about. So it's not a stock recommendation, but it's just sharing with the audience here that this is what I will do for my own portfolio. So take it with with a pinch of salt, so to speak. Okay, so my preferred type of trade, just to give you an idea. Of course, this is just a screen capture. I will show using the platform later. This screen capture is taken on Monday before the market opens. So the strike prices and the premiums would be different already if you look at it today. So Nvidia, if the likes of Nvidia, if let's say is a 3rd of May expiry, which is this coming Friday, if given a choice, I would do a short put for Nvidia at the strike price of 770. Yes, it's what I'm actually doing is I'm giving myself as big a margin of safety as possible, because I'm doing this not for the objective of getting assigned the stock at 770. I'm doing this for the objective of getting the premiums. Okay, and with that objective in mind, I'm very clear about this objective. So I want to really try to minimize myself the probability of getting assigned the stock. So I'll sell as far out of the money as possible, but yet at the same time try to earn as much premium as possible. That is my MO. That's my perspective. Okay, so another example, another stock that I do selling covered calls is Baba. As you can see here, I currently have 160 shares of Baba. So what I can do is I can sell one contract of covered call on Baba. So maybe not for not for this coming Friday expiration, because this coming Friday the premiums are pretty thin, nothing much for me to get. So what I'll do is, and my average price of Baba is somewhere in the region of, let's see, it's somewhere in the region of 70 plus. So what I'm doing is I've put in I will be choosing a strike price of 81. So yes, I will get less in terms of premium, but even a little premium is still okay for me. If the price of Baba really goes up and I have to surrender at 81, but still a good outcome for me, because it means that I will also have capital gains. All right, so that's my thinking process. That's my perspective. So to sort of sum it up in one simple slide, what are the considerations that I apply whenever I do selling? Because I always like to say this in very layperson terms. Selling means I collect money, right? Buying, I have to put down money. And if you notice, I've only emphasized on selling calls and selling puts. Although I did mention about I do have three basic option strategies. The third basic option strategy is buying call, and typically I'll buy a call that is 4 to 6 months out. I used to buy leap calls, very long calls, but I don't practice that anymore. Okay, I am less in favor of buying calls these days because I don't like the idea of tying up my capital into a buy call contract and suffering the opportunity cost of not having the capital that I can use as buying power for me to trade options on. So whenever I trade options, these are my three key consideration. I will go for weeklies. I will layer my trade. For those of you, I'm just going to take a risk and assume that, okay, maybe some of you may not really understand. So for avoidance of doubt, just let's have a common terminology. When I say layer my trades, it means that for weekly options, I will do one trade that's expiring this coming Friday. I'll do one more trade that's expiring next. So I'll do one trade expiring 3rd of May. I'll do one trade expiring 10th of May. So, but doesn't mean that the trades have to be at the same strike price. In fact, the further expiry, I will go for even further out of the money strike prices. And I emphasize a lot in selling out of the money. Even though on a stock that I like to own very much, I will still sell a little bit out of the money just to have a certain margin of safety for myself. And the other key consideration is really about risk management. I emphasize a lot on not doing trades if it is across the earnings period. So for example, Tesla is over already. On was yesterday. So that means yesterday I did not enter on. Today I can, and I will if there is opportunity for. So for the likes of Datadog, Shopify, all these are mostly next week. PayPal I'll probably enter only, or PayPal is before market open. So I will see how the market, the price performance of PayPal is. Then I will decide how if I want to enter. Teladoc, okay, so can do because it's after earnings. So I will avoid taking positions. In fact, if it is a very, very volatile stock, if I do have any positions that are cutting across earnings, I may even close it, or very, very near to earnings, I may even close as part of my own risk management. So with this, I will, if everyone is okay, I will go I'll toggle to my trading platforms now, and just to let everybody know what is currently my portfolio like and how do I execute certain trades. Okay, bearing in mind that Interactive Broker, this is, although it's a very good platform, but one thing I don't like about IB is that before the market open, the platform usually doesn't show you much of the market data. So option premium prices, you don't really, sometimes for certain counters, certain stocks, you can't really see what's the pre-market prices. So we just have to keep that in mind. So in that case, I will just use Tiger. All right. So the hottest, the flavor of the month is Nvidia, right? So I've already opened Nvidia. Let's take a look at Nvidia then. If it's for 3rd of May, what would I go for? Okay. Monday, the screen capture that I did for Monday was a 770. It is the boat is still ready, right? So 770 is no longer attractive for me because it's I'll make only $66 for one contract. I'll go for 790. Still okay. It's the margin of safety is lesser, but okay, I'm pretty confident that I'm pretty comfortable with this risk, so I may just take one trade. I'll just do a short sell, short put. Okay, okay. For some reason, okay, in the market now, fine. Okay, or maybe I'll just switch to prime account just for demo purpose. Okay, so let me just unlock. Okay, I may not actually put in the trade of submit a trade as, because in case we have a very interactive session and then it cross over into the market open and then the trade goes through. Okay, so but this is just purely for demonstration. Oops. So I'm gonna, let's say, place one order. Okay, so I'll put in one trade for Nvidia at 790 strike price. So that's a put. Now, Baba, as an example, just as an example, my share price is okay. Let's see what's my average price for Baba, right? I actually have one trade already, but let's just see what is my okay. Okay, so okay, so anyway, if I were to, let's see what is, can I find Baba? If I can find Baba in somewhere inside here. Okay, doesn't matter. Let me. So what I'll do is I will. Okay, so Baba, I remember my average price was around somewhere in the region of 70. So I'm gonna just play safe and try to sell it as high as possible. So this is what I do is I want a call, right? So I'm gonna sell out. So the option trade that I actually entered was I already have an option trade, which was here a Baba call expiring next week, next at 81. Okay, in today's price, the 81, the premium was $51. That's better. That was better than the premium I got at $38. Okay, so I actually own quite a lot of stocks, so I don't really say, hey, $50, $30, waste time. No, that's not my perspective. Since I got so many stocks, I will do, if every stock I can do like $30, $50, adds up to something that's also quite not too shabby. Okay, I would say not amount to be scoffed at. Little bits add up, right? Little pieces add up to can be quite a lot. Okay, so for example, if I have Albemarle 100 shares, AMD, if I were to able to do one trade here, one trade there, one trade, it still can add up to quite a lot in terms of uh, covered call premiums that I can make out of these stocks that I own, right? So I have 100 shares of Albemarle. So I've already done a call expiring this coming Friday at this. Okay, of course, the stock price is increasing now, so it's on a up. It is on up trajectory. It's an uptrend, so that's why the call premiums are actually increasing. It is even higher than what I have managed to sell it. Okay, so Albemarle. So the premium I sold it for was $2.42. The market price of the premium is $3 plus. It is what it is. You can't have it all, right? So let's see if there's any. So ARC, Cathy Woods, right? So I have already done two calls. So this is another way I'm layering my trades. So I've done two contracts on ARC, two sell covered calls on ARC. So I have 200 shares. So theoretically, I can do two more contracts, or I can just offload the 200 shares in the open market. If let's say the price is something that I think it's worthwhile for me to do so, and therefore get back some cash and use the cash to churn and have more buying power for to do more trades. So that's my perspective. So Cisco. So I haven't done any calls of Cisco because the one thing Cisco is the premiums, because it's not a very volatile kind of stock. The premiums are not very exciting. So my average price for Cisco was about $47, $48. So I could theoretically sell it. If I sell it for this week, the premiums are very thin. Nothing much, no meat for me. No meat for me to get. Let me just, maybe I blow out the screen for you so that you all can see better. Okay, okay, so for March, wrong. For May 3rd, no meat. So I have to go and look for May the 10th. And bearing in mind, I only have 150 shares of Cisco. So I'm just going to do only one contract. Remember, I shared with you folks, never again do a silly thing like selling a naked call and lose 50,000 in one night. Never again. Okay. It's too painful. Even today, I think about it. I don't know how to explain to the woman in my life, how the hell did I blow 50K in one night? It's just mind-boggling. So May 10th, maybe I can go for 49.50, but again, the premiums are also not very. Okay, so how about May 17th, the monthly expiry? Hey, if I go for 50, the 50 strike price, which I'll, okay, not a lot of capital gains, but I can earn like maybe $200 capital gains if I were to sell it at 56, for instance, at $50 strike price. Maybe I'll just consider, and let's take a look. Okay, probability of profit at 77%. Okay, so not too bad, the odds. So maybe what I'll do is I'll just put in one order first. Okay, so sell order. So I just put in the order. Okay, market is not open yet, nothing will happen. So I just let it be, let the system run. Okay, so that's Cisco. Now, how about ARC? Let's just say if I were to do a sell call on ARC using not Thinkorswim. So look at ARC, and if there is anything that's worthwhile doing. So ARC, my average price is 45, right? So I don't mind actually continuing to hold on to the stock. So I'm actually not really really looking at selling at the money. So I'm actually, and the price the price is also the price also seems to be on an uptrend. So why sell it at the money and potentially miss out on capital gains, right? So that's my thought process. So I'm gonna go for, if I were to do a covered call trade, I'll probably go for as high as possible. Maybe not this week. I'll just go for next week. I'll just go for maybe a $50. Yes, I'll earn much lesser, but hey, it's okay. If it doesn't hit $50, then I still continue to hold on to it. And I like this kind of profit probability is 93%. So it's not a guarantee that is confirmed going to guarantee me this, that the stock price will not hit this, but it's okay. I'll just put in one sell order. Okay, I'll just let the system work when the market opens. So that's basically what I do on the typical night. And I just like to also share. Okay, so I do not, even though I trade weeklies, right? I do not actually trade through the night. These days, I'm actually quite lazy, quite chill already. I will end, because I do weeklies. I enter on Monday. I do all my trades on Monday. I pang kang for Tuesday, Wednesday, Thursday, and then on Friday I just go in and take a look and see if I need to do any repairs to my trades. But typically, if the market is going sideways or going up, or even if it's down a bit, but it's not too adverse, I typically don't do anything. Just let the option trades expire, because I already sort of position it in such a way that I will sell out of the money anyway, right? And if it is very far out of the money, then even better. Then the likelihood of me actually doing intervention is actually lesser. Not that it will never happen, but it's in terms of frequency, it's actually lesser. Okay, so with that, for those of you who were in the market last night, you probably can remember Tesla. What a night Tesla had yesterday, right? The stock basically flew. Okay, so I'm just going to move it here so that you can see it better. Okay, so this was yesterday, right? 29th. Today, the market not open yet. 29th. Look at the price. So I think in the course of the night, it hit a high of 198 from the previous day close of what? 170, 172. So it just shot up. So it was a very, very exciting night. On nights like this, of course, with hindsight, I kind of wish that, hey, maybe I should have invested time and effort to learn about strategies like straddle and strangle. But then again, I tell myself, hey, don't be greedy. Stick to what I know best. Stick to what I do best. That's it. There's a time and place for each kind of strategy. So even to me, it's not a missed opportunity because I still get to play some trades on Tesla. In fact, I played some trades on Tesla last night. I sold one contract Tesla at 172.5 put last night, expiring this Friday. I laid one more trade for next Friday, 165. So the premiums I got were in total about 200 plus. So a lot of trades like this, 100 plus here, 100 plus there for puts. 50, 60 here and there for calls. So add up together, that gives me on average every week, I'm talking about 1,005 to 1,005 USD every week. So that translates about 4K a month, which is not a lot. I have to admit, but for me it's enough. So the point is, I'm actually doing it slow and steady. I don't take too much risk, not excessive risk, and that has been the approach that has worked for me so far. And I hope that's all I have for sharing. I have nothing further that's concrete to offer for you folks. And at this stage, I'd like to maybe hand the stage back to you, Richard, for you.
Okay.
Richard, thank you.
Thank you, Siong. Okay, so you stopped sharing already, right? I will
Yes.
share my screen.
Okay.
Later on, you'll be providing them a link on how to reach out to you.
Yes,
Okay.
that's right.
After the Q&A, is it? Or you want to?
After the Q&A, yes, correct.
Okay, sure. So let me just
So
share my
after the Q&A,
screen.
yeah.
Now, for those of you who are here inside the webinar room, if you have questions for Siong, please type into the chat box now. The chat box can be found on the bottom right of the screen. And if you're using a mobile device, please scroll up or down to look for the similar chat box and type in your questions for Siong. And meanwhile, I have some questions for you, Siong, if you don't mind.
Yes.
If it involves some content that you'll be covering in your course, feel free to let me know so that you don't need to answer them. All right. So otherwise, I'll just ask freely. Okay.
Yes,
so
they should.
Yeah. So from what I can see, you are selling covered calls, which means that you need to hold stock first.
Yes.
Right.
Correct.
So in multiples of 100. So may I know how do you choose the stock? Do you look at IV percentile, IV rank, or how do you come up with your basket of watch list for your covered calls?
Okay, so that itself goes back to, maybe I didn't cover this part about value investing sufficiently. Do you recall it at the beginning of my sharing? I have this 4-step FATS process.
Mm-hmm.
The step one is F, right? Fundamentally, what kind of investor I am, what kind of investor you are. If I'm teaching your students, I'll ask them, do this so-called study on yourself. What kind of investor you are? What do you like? What is your circle of competency? Meaning to say that, what are you good at? Are you good at technology? Are you good at, let's say, shopping? If you're shopping, then you go for, if you're good at traveling, then you go for stocks like your cruise operators that, or even a casino, this type. So after you know yourself, then the A part, the analyze which stocks are good for you. That is the FA part. And FA, I have 5 criteria. Number one, it has to satisfy like a certain requirement in terms of return on equity. It has to satisfy certain requirement in terms of profit. Uh, it has to satisfy in terms of, let's say, cash flow, profit trends, and what do you call, debt to equity, and and 1 or 2 other criteria. So I have total of 5 criteria, and these are the criteria that so-called help me to sieve out the stocks that are potentially good for a investor like myself, or who are maybe skewed towards a certain kind of profile. Okay, so from there, then I will say, okay, these are the stocks that are suitable for me, for my profile. Then I'll start looking at, do the stocks have options, and then I use TA to say, okay, what is the strike price I can enter for options? Then I will decide on the option strategy accordingly. Okay, so maybe if Richard, if we have time, maybe I can just do a very quick demo.
Oh, okay,
Yeah.
sure.
So,
Yes, we do.
so maybe
You want to do now or you want to do later?
yes. So
Now,
I'll,
okay.
if you
Then you
don't mind,
can
I'll
take over the
just,
screen again.
yes, thank you. So I'll click on stop sharing, right? Then
That's
I
right.
will click on share screen. So actually, this is also part of the course, but I'll just give the audience here a flavor of what I do. So I will use screening tools, good screening tools like FinVis, for instance. Okay, so let's say I'm looking at stocks that give me, on a FA basis, fundamental basis, I want to look at stocks that give me EPS growth over the past 5
Siong,
years.
yeah,
Yes,
the screen is
yes.
still loading, so
Oh,
I think we need to give
okay,
it some time.
okay.
It is
Oh,
loaded
yeah,
already on
okay.
your side, is it?
No, I couldn't click on the share button yet. Okay,
Okay.
maybe I'll just click on the Chrome tab first. Okay. Okay, so, okay, I'll just share this.
Okay, when the screen loaded, I'll let you know. Okay.
Okay,
Okay, screen loading error. I think you stop sharing
okay.
and
I'll
share
stop
again.
sharing.
Ah,
Okay,
okay.
then I'll share again.
Yeah, correct.
Okay.
You selected the screen to share already?
Okay. Yes.
Okay, let's give it a minute.
Yes. So
Yes,
are
okay.
you all
I
seeing
see it.
this?
Yes,
You can't see this, is it?
see it
Oh,
already.
sharing this tab.
Finvis. I see Finvis already. Can see Finvis already.
Okay, but okay, right. So I use a lot of, yes. So I use Finvis. I'm, yes, correct. So there are few tabs here, right? So what I'll do is I'll go to fundamental. I'll say, hey, I'm gonna select this criteria. First criteria is EPS growth. I'm gonna go for companies that have good profit growth for the past 5 years. Oh, then I set the criteria over 15%. Okay, so then I'll say, hey, I want companies that maybe give me ROE of over 25. For example, then I'll say, hey, I don't want companies that are too expensive. Maybe it's for example like this. Then PB, not too expensive. Maybe PB under 3, for instance. Okay, so then debt to equity under 1. Okay, so margin, operating margin, I want companies that have pricing power, so they can, even if they raise price, they wouldn't affect the business. So over 15%, for instance. Okay, so, and these are some of the criteria. So this will give me a, let's say, by right, for some reason is okay, so it is, it's not showing any, what is this descriptive?
Maybe you can click on all.
Okay, Richard, for some reason is
oh, you only you chose only
yes,
one
I just
industry,
click on all,
software
but
infrastructure.
okay, so that is, okay, let me go back to this. But by right, there should be some, what do you call, based on these criteria, that there should be some, what do you call, stocks that show up. But I don't know why it's not showing up.
Do you intentionally
Okay,
want
so I'll
to
just
show
say I
just
won't
the
be so
software
restrictive.
infrastructure?
No. Somehow I think it's a mistake. Okay,
okay.
so I've got all this. So when you see this, it means that these are the based on the criteria are selected, right? So these are the stocks that are prospects for me. Then I will go into each and every. I will just look at the ones that sort of excite me or kind of meet my profiles based on the industry. For instance, if I believe in, let's say, healthcare, so this will be something I will look a bit deeper, and then I will then do the next step, which is using TradingView. For TradingView, I will, okay, pardon me. I will then, what they call, look at what is the price action. So let's just for sake of what do you call, example, right? We'll just use whatever is here already, Obimal. So from here, I will, from the TA, the charts, I will then ascertain or identify what would be the price, that I can consider as option strike prices. So over here, okay, Obimal, the earnings is, okay, so Obimal earnings is today. So by right, I will only do Obimal tomorrow. Okay, but I will identify, hey, looking at this, what would be the, for example, what would be the support and resistance? So I'll just do a just 1 year time frame. Okay, so support, the most recent support will be somewhere here, 102, right? Under the low of 102.02. Okay, so then I'll say, okay, 102 shall be the strike price that I will look at. Then from here, I will go back to the trading platforms. The trading platforms will then, okay, let me just stop the sharing and I will go to, so I'm sharing the entire screen now, right? Oh, no, not yet.
Not yet. Okay. I think it'll prompt you
Okay,
for it.
I will,
You choose.
yes. So for me, as a, yeah, yes.
While waiting for the screen to load, have you selected the screen?
Yes, I selected entire screen.
And then okay. And then you click share the entire screen, right?
Yeah, just that the share button is not showing
You,
up
you
yet.
have to choose the entire. You have to choose the screen. You have to click the screen. Then
Oh,
you click
screen.
the share.
Okay, got it. Okay. All right. So now I'm showing the entire screen. So you
Yes.
can see now, right?
Yes.
So once I've done this, so this will be, let's say, this will be the this will be the price that is determined to be a resistance. So what I'll do is then I'll go to my trading platform. Let's just say my trading platform is, I decide to use IB. So here I'll be more, right? Of course, I'm not going to do anything now because now is today is the what they call the earnings release. So I'm only going to do it tomorrow. But let's just say for sake of demonstration or illustration, what are the possible trades that I can do? And anyway, for information, Albemarle is one of my favorite counters to do options on because the premiums are quite good, as you can see over here for May the 3rd. Okay, that's also because earnings is coming up within this week. So typically the earnings, the premiums will also be quite attractive. Okay, so let's just assume that, hey, earnings over, and this is the kind of, so what is, just now I saw that 102 is the strike price, right? The support, that will be the strike price I can consider. But if I were to choose 102 to sell a put, no meat to be earned. So I have to go up, I have to sort of adjust my what they call options strike price choice. So I have to sort of scroll down and see, hey, what are the possible options, what they call strike prices I am comfortable to select. I can go for 116, for instance. That will still give me about $1 or $100 premium. Okay, and let's see if I were to choose this. What's the probability? 84%. Okay, and I'll just have to then decide for myself. Hey, am I comfortable with this? Is this a risk level I'm comfortable taking? If not, then move on. Then I have to make a trade-off. I want to have more safety, but I have to compromise in terms of premiums. So maybe I'll go for even further out of money 113. Yes, I earn a bit lesser, but I sleep better. But hey, okay, probability of profit is higher than 90%. That is a criteria I set for myself. Okay, so Richard, that with this I hand back to you.
Okay.
I hope
Yes.
this answers your question.
Yep. Don't. Oh, okay.
Okay,
I
I'll
think
stop sharing now.
don't stop sharing and start
Oops.
sharing because that will take more delay. So you can
Okay.
stay on your screen first. How? So yeah.
Okay.
Okay. So if I understand you
Sure.
correctly, correct me if I'm wrong. What you are doing is that you are looking for fundamentally strong stocks that you don't mind owning, right? Using FA
Yes.
first.
Yes.
And then after that,
Yes.
you will use
Correct.
TA to identify where is the support, for example,
Yes.
right? And then you will use
Yes.
those
Correct.
the area, the zone, to look for the
Mm-hmm.
strike price that you can sell naked put, right?
Yes. Correct.
And then
Yes.
if it's not enough meat, then you have to go closer to the fire, lah,
Yeah. Yeah.
right?
Correct. Correct.
So then if you choose the strike and you are willing to accept the premium
The
that is
risk.
there,
Yes. Yep.
then you will sell is it a cash secured put?
Mm, uh,
Meaning that
typically,
you will
because
be able to take assignment no problem for your account.
yes, correct. But
Okay, then you are set.
IB typically has I typically have leverage given by IB and as well as Tiger lah. So yeah. So I it's technically correct that it's cash secured put, but I can still do like leverage options trades.
Understand.
Yep.
So you don't mind to step into the margins if need lah,
Mm-hmm. Yes, correct.
right? And you
Correct.
will, of course, if all the naked puts are assigned,
Yep.
it will be within your margins ability to take assignment for all the positions.
That's right.
Okay.
That's why I always play within the boundaries of the buying power.
Understand.
Yeah.
Okay, so then after that, then you will sell so your start of your wheel strategy
Yep.
is identifying fundamentally strong stocks, look
Mm-hmm.
for the support levels,
Mm-hmm.
and then look for where there is enough meat to select the strike price, and then
Yes.
sell cash secured put. That's the start, right?
Yes. Nicely said.
So, and the aim is not to take assignment, but you can take assignment because your account provisions
Yes.
can take
I
the
have
hit.
the ability. Yes. Correct.
Okay,
Yeah.
good. So let's say if you don't get assigned, and you typically sell how far out? The next week, is it about 14 days?
I typically sell this week for this week and also this week for next week. So so that's what I mean by layer the trades in this way. So I've
Mm-hmm.
at any one point in time, most of the time I have 2 weeks worth of options that's currently live.
So if
running.
you're selling this week for this week, then you're selling early in the week.
Yes, and typically I only work for one day only, which is
Right.
Monday.
Yesterday.
Yes,
Okay,
correct.
understand. So yesterday you will have I did your homework first and then
Mm-hmm.
put in your trades to sell for this Friday's expiration and then
Yes.
next Friday's expiration. So for the next so typically how much meat are you looking for? Are you looking for a dollar amount or are you using
Yes,
delta to
yes.
select?
Dollar amount, just $1.
Ah,
I mean, as a rule of thumb, I try to earn at least $1 for every trade, or at least $100 for every trade to make the effort worthwhile. Otherwise, do until 黑黑赚$5, $3, no, no, no
understand.
point.
So you're
Yeah.
looking for the $1. So then that may necessitate you to use to choose the stocks of a certain price range, isn't it?
Yes, correct.
So what
That's
will be
true.
the price range usually be
So
above a certain amount?
above $100. So
Ah,
typically stock prices that are 100, because anything lesser, not that you don't have anything lesser, the stock the premiums won't be as rich. So just now we saw the example of Cisco, right? Cisco was only like $44. The premiums not a lot. There are certain exceptions, of course, like Shopify. Stocks like Shopify, they do give quite decent premiums, but these kind of stocks are more rare than more the exception rather than the norm.
understand.
Yeah,
And probably also risky, right?
and riskier, yes, riskier, yes.
Low price stock with high premium is smells like risk to me. Yeah. So typically
Yeah,
bet above $100 and then
yes,
looking for a dollar and you will work one day for the week to sell
yep,
for this week and next week. So
yes,
and you will hold it to expiration.
yes, correct. I typically don't close it unless I need to intervene because the position is really at risk really, and
Okay, what do you mean by at risk?
at risk means that if
At
let's say
risk
the
of
stock
assignment?
price risk of assignment, yes.
So what do
So
you do then when you get risk of
if
assignment?
I can either do the riskier thing, which is to convert it into a vertical spread, or even to an iron condor, for instance. So if let's say it's a straight sell put, then I will buy a put, and maybe even in the extreme case, I will even convert it into a iron condor, like even do a bear call spread on it. But
Hmm.
that is more a rare. Uh, that is more a rare occurrence or strategy. It is not the typical, not what I would typically do. Typically, I'll just say, hey, if this is a gone case, this week is gone case. I'd rather just bite the bullet, take the hit, take the loss, move on.
Take the loss,
The
but wouldn't you
that
just be
means
assigned? Why would you be
uh
taking any loss?
no, if let's say I don't want to tie up my capital, because if getting assignment means having to put down like 15,000, 20,000,
Right.
I'd rather have that capital to churn to sell more naked put or short put contracts for the following week. Maybe
Ah,
that is what I choose to
right.
do rather
Do-
than tie it up there.
would you just roll? Will you just roll it down and roll it out in time,
Um,
or you just close and then you reevaluate everything?
yes, I in the past I typically will roll it, but I've also learned that rolling is basically just deferring your pain to to the future, and usually it doesn't end well. That's my
Right.
experience. Yeah.
Right. So when you get threatened, then you will just buy to close
Buy the
the
close. Yeah.
position.
Simple. No need to think too much. Just
Right.
close. Yeah.
Right. So that will be okay. Okay, I
Yep.
understand. So you did layering. So you this week Monday you sell this Friday and next Friday.
Yes.
So if this Friday get threatened, do
Yeah.
you then you close out this Friday's one, but next Friday's one is further away.
Yep.
So it may not be threatened yet.
May
Would
not
you
be
just
threatened
leave
yet.
it first, or you
Leave it
will
first.
also
Leave it first.
Ah,
Because for next Friday, remember today, for this week, I sell it at $100 strike price. Next week's one, I probably will sell it at 90 or 80. So maybe there is a bigger margin of safety. So there is an enhanced layer of risk management that I already put in the first place.
Right.
Yeah.
Okay. So you can take assignment, but you prefer not to take assignment.
Yeah.
And then you will close out and take the loss.
Yeah.
And what kind of loss are you looking at? 2 times. I mean, how do you determine the loss amount? Is it by based on the underlying price or based on the premium of what you have sold?
Based on a premium.
Yeah. Okay. Understand.
If let's say, so as an example, if let's say I sold this short put for and I collected $100 premium, and then if I had to buy it back at if I had to spend $1,000 premium to buy it back, then I
that's
say
10
forget
times.
it. I mean, yeah, that's then I'll say forget it. Just I let myself get a sign. Then I'll see how to milk it. Sell
cover
cover
call.
call. Yes, correct, and try to milk it. Yeah.
So if not 10 times, then do you have a multiple or?
No hard and fast. I also look at the stock in concern and form a thesis, form an opinion to see how likely, what is the story of this stock? Is it likely to to have a chance to rebound, to recover? Take for instance Tesla. If I if I earn $100 premium and then if I have to buy back at $1,000 premium, I'll say forget it. I will get a signed Tesla because I know Cathy Woods is going to come to my rescue in one way or another, because she will swoop in like a white knight. Tesla stock dropped so much already, she will swoop in and buy, and then her actions will have this effect of hyping up the market and then driving up and making the stock recover. So for instances like, I mean, it's a very extreme example, but
Tesla is in its own world.
Yes, in its own world. So there are stocks like this that I will have different ways of handling it or approaching it. Yeah.
Right.
Yeah.
Okay, got it. So, that kind of covers the one question that I asked.
Sure.
And also thanks for your clarifications.
Yeah, I hope it's useful for the audience to sort of consider, are they doing similar, or is there some nuggets of information they can take with and maybe consider using for themselves. I'm not sure.
Now I'll take a look at what are the questions that has been posted.
Sure.
All right.
Sure.
Let me see. A question comes from Daniel. He's asking what is the purpose of layering. That means on Monday you sell this Friday and then next Friday. Why do you do this layering? Why don't you just do it week by week?
The simplest answer is laziness. I can do two because I mean, I've sort of also experienced it. Typically if I can do like 2 weeks of trade in one go, then the likelihood is that if I do it for this week and then the stock price is like kind of stable or drop next week, it potentially can also continue on the same kind of momentum. So might as well just do it, do 2 weeks of trade straight away and be done with it. That is my perspective, but I'm not sure whether people who are in this game longer than me or more or equally experienced, whether they agree or not. Okay, so I don't have a scientific explanation for layering, okay, because it is really about trying to maximize cash flow for myself. If I can, when you sell, as we all know, when we sell further, right, we can sell at what you call further out of the money strike price, and the premiums usually are also better. So if I can only get like $100 premium for this week, I can potentially get 150 for next week. So that's my thought process of why I do layering.
Understand.
Yeah.
So you do your work once,
Yes.
analyze the stock,
Yeah.
just select the strike price.
Yes.
Then you do 2 trades.
Yeah, do 2 trades. Yep.
Right. So then when the next, let's say this week it expire worthless.
Yep.
Right. So
Mhm.
then come Monday, would you layer in the third layer?
Yes, I
of the
will.
same stock?
Yes, I will.
Oh, you
Because
will. Okay.
yes, I'm gonna work at the start of every week anyway. So might as well just do that for the week after.
Right.
So
Right. Right.
one
So
more
you're
layer.
kind of like doing all your analysis over the weekend, from the way I am hearing you.
Actually, to be honest, after a while you kind of gravitate towards the same few stocks. Yeah, right.
Understand.
Yeah, if you know is if it's like saying same old. If what is not broken, you don't change it. What works for you, you continue doing it. So after a while, it's sort of not exactly muscle memory, but it's we sort of still for go back to the same few stocks because these are the try and tester one. These are the ones that work for me. These are the ones that work for you. You yes, once in a while you can get a bit more adventurous and try something new based on what you read, based on what you discover or chance upon. But by and large, week in, week out is still the same. It's for me, it's still Tesla, it's still Coinbase. But Coinbase this week I didn't touch it because Coinbase is reporting earnings, I think Thursday or Friday. Roku also earnings this week. And these are the few stocks that I usually focus on. Yeah.
How many are there? Your those
I
watch list? 10 or
okay.
20?
Maybe I share the screen again. I don't mind letting the audience see my what do you call my portfolio. These are the same few stocks that I always. Okay, so I have AMD,
Hang on. The
AI.
screen not sharing yet.
Oh,
You need
okay,
to
okay.
click. You need to click the screen and
Oh
click
yeah.
share.
Okay.
Yeah. Later, don't unshare. Stay on the sharing.
Sorry, I excited to share.
No problem. No problem.
Okay. Okay, so you can see, right?
Yep. Now I see the tunnel
Okay, so
effect.
let me. Okay, let me go back to the IB.
Yes.
Okay, so these are the ones that have AI, ALB, um, AMD, ARKK, ARM. You see a lot of actually tech stocks, but Celsius is a non-tech. Okay, Cisco, DB is a bank, Experian is pharma. This one, this one's a sad case. I thought electric vehicle is going to be the way of the future, but you know, I got it at on average price of $16. Now it's down to $1 only. Sitting on a paper loss is 10K. Aye. On semiconductor. So this is one of the cheaper, less expensive semicon plays that I sort of chance upon. So I'm quite happy to chance upon this one. In terms of premium, not too shabby, even though it's not $100 stock, right? But let's look at the options. I won't say it's super fantastic, but okay. So this week is okay. The other reason why I do layering is okay. If this week not much meat, then I have to go on to next week really. Next week, if I go at 67 or 60, I still can earn $100, right? So that even for a stock that's less than $100, premiums not too shabby. Okay, then I'll maybe can even consider doing a monthly expiry and go even further out of the money. So on semiconductor is one that I like a lot. Okay, so of course Pfizer, Riot is blockchain. Okay, so currently still underwater a little bit, but I'm like I said, I'm not sitting on my laurels. I just sell one call contract, and if it really shoots up, it more than covers my average price. With us, if I sell it at 14, Russia, I really must scold Putin already. Go and invade Ukraine for what? Cost me to lose money. Bloody hell. Okay, then of course Shopify, as I said, Shopify is also less than $1, but premiums are not too shabby. Then SQM is minerals, raw materials for making EV batteries. Okay, and of course Tesla, the ever trustworthy, the ever reliable Tesla, or the ever unpredictable Tesla, right? So in fact, now I have 300 shares, right? So I did two sell call contracts. I'm keeping one just in case if, let's say, tonight or any time let's just say hypothetically the stock price shoot up to 500, then I'll just sell it at 500 and can get. I'll just sell 100 shares away $500 and get the money back. So that's how I sort of leave a bit of wiggle room for myself. Okay, so workhorse is again another EV, electric vehicle, but again this is one of those sad stories where I have a thesis about how about the growth story. Okay, I was sold on the growth story, but it's more like a dart now. It's not like a bomb now. So this is and just a flavor of what are the stocks I typically gravitate towards: Tesla, Shopify, Riot, some semicon plays like ARM, AMD, and some materials or industrial kind of stocks like Albemarle. In fact, week in, week out, you will see me do ALB, AMD, ARKK, and ARM, as well as Tesla. Cisco, Deutsche Bank, I've already had it for a long time already. In fact, I'm just waiting for the stock to hit $20, then I'll just offload. You see, for this one, I didn't even bother to sell a call on it because such a stable stock, very low volatility, don't get much meat out of the options. Okay, so that's just more of giving you folks a flavor of what I typically do. Okay, Richard,
Thank you.
back to you.
Don't quit yet.
Don't quit. Yes.
Unshare. Yeah.
Yep.
So because later on you will need to show what you plan to offer to our audience, right?
Mhm.
So okay. So from what I can see is that you have this main watch list, and then you will basically do a wheel strategy on it, right? Selling cash secure put, preferably don't get assigned, but if you get assigned, it's okay because these are the stocks you plan to hold anyway. Right, and then the account need to have the funds and the margin enough to take the assignment. Then if you do get assigned, then you will do the other side, which is to sell the covered call.
Yes.
So when you sell the covered call, are you looking for the similar $1 premium?
As far as possible. Like for instance, if you look at Tesla, right? I sold a call that's expiring this Friday. My average price is 172, so I sold it at 210. So at this level, I still can get quite good premium. So that's good. But of course, if I want to be if I want to have this, if I desire to still have a chance to continue to hold on to this stock, because actually at the average price of 170, it is a very good price to actually own Tesla. So I'm not exactly looking to sell away so quickly if I can. So I don't mind selling it at a much further out of the money strike price for the covered call, but I trade it off with my trade-off is in terms of the premiums.
Understand.
So my premium is only less than $30, but it's okay because this is not the only trade that I earn very little. I earn only a bit in terms of see Riot. I also sell for, but that's also a function of Riot being a very cheap stock. $12, $13 at the current price of $10. Option premium, you won't get much out of it anyway. Okay, so I'm happy with $25 for this one because you see I have 25 here, 20 plus there, 30 here, 30 there. It still adds up to some amounts in total at the end of the week. So still not a bad outcome.
Okay, great. Daniel, I hope that answers your question about layering. Let me now move on to the next question. This question comes from Peter. Peter Francis. He's asking if you sell naked put, you require the BPR, buying power reduction or something like that, right? BPR,
Yes.
which will be locked up.
Yes, correct.
So you will need a huge capital to run this strategy, isn't it? So I think this is related to a question that many people will have in their mind. If they want to do what you do to
Yeah.
do this strategy, what kind of capital do they need to have in their account?
Okay, I won't lie. The more money you have to start, the more flexibility you have. I think this is a hard truth that everybody has to recognize. So I started on my journey with about 70,000. Okay, so over the course of the years, I managed to grow my portfolio. So it has worked for me in the sense that when you have more, you are able to do more. You are able to do more trades. You are able to do more in terms of higher price stocks like your Tesla, your Google, your AMD, and the likes. Okay, because maybe I show this account, right? So definitely with this amount, it definitely helps because with this kind of amount, I can do NVIDIA. If Tiger, I believe, requires a startup of initial funding of 3,000 or 3,005 USD to start, but 3,000 you won't be able to do much except for maybe the cheaper kind of the lower price kind of stocks like your Riot, for example. Okay, so or maybe if you so Riot is currently $11. No, that's call. So I choose put. So if you want to sell at the money or close at the money, you only get like close to $30 premium. Okay, I mean we all have to start somewhere. I always tell my students. In fact, my students also ask me the same question. Coach, what is the amount I have to start? I will tell them if you can and if you're willing and able, minimally start with 10K. Better still 20K, 20K USD because it gives you more flexibility. Then you can with 20K, you can do maybe one contract on something like Apple or Google, that kind of one contract on Apple or Google, and then maybe one more contract on one more mid-price stock like your Shopify or your Alibaba, for instance. Minimally, you can do at least these 2 trades or 3 trades even. Then consistently build up your winnings, build up your what do you call experience and experience and efficiency, and over the period of time, you'll be able to grow your portfolio and be able to do more. So that is the kind of guidance that I give to my students. I would say that it's also very applicable to to tribe members in your community who want to know, hey, yeah, what would be a equitable amount for them to start. Of course, everybody's risk appetite is different. I would say that if you're willing and able, 20K will be a good start point. Yeah. So back to you, Richard.
Okay, great. Thank
Yeah.
you. Peter, I hope that answers your question about uh, what kind of capital is needed. Yeah, yes, you will need capital to make money. Yeah. So from what I'm hearing from Siong Yo is that the bigger the capital that you have, then you can be trading the higher price stocks where the premium is higher, and then maybe you can also trade more symbols. So when you
In
are able to
fact,
do that
Richard,
with a
if may I
larger
also share
capital,
something?
okay,
May I also share something?
go ahead.
Yeah, I have this account. I open up another account under my own name. This one is really more for experimenting. Now, this account, if you look at the capital I have in this account, okay. Now, I created this account more for experiment. I wanted to try something. That means from a small, can I actually grow a small account into something sizable into the future? But I need to be very, very deliberate and very diligent. So for this account, what I do is I will every week I only have the ability to trade one stock. And every week what I do is I will trade maybe one stock like Tesla. I'll do one sell call on Tesla or Albemarle, for instance. Like I sell one, let me just, Tesla put expiring this Friday. Okay. Now so what I'm trying to do here is I'm trying to experiment. Is it possible for, let's say, your community, your tribe members, to start off small and eventually also make it big? So this one is akan datang lah. If ever in the future there's a chance for me to be invited back, I would, and I have results to prove, then I'll be happy to share this experiment.
Right. No problem. No problem.
Yeah.
So it's like a small account challenge.
Yes, small account challenge. Yes.
Understand.
Yes. Thank you for giving me that kind of idea. Yeah.
No problem. Okay, let me move on to the next question. LC is asking,
Yes.
if you sell naked put, meaning not cash secured, how do you manage a situation of a general market sell down where all your positions go below your short put strike, and you have to take assignment for all of them without sufficient cash?
Okay.
I think in the first place, this should happen.
This should not happen. Rightfully, this should not happen.
Because
if you don't have, normally cash secured puts is you can't do a lot of trades anyway. Okay.
Correct.
So usually that doesn't happen. Usually. The worst, that means the platform will loan money to you, and which means you have to incur interest on the outstanding amount that you loan to the platform. Yeah. But that is a situation where I advise members to avoid, unless you know what you're doing. And in my case, I will be very upfront to say that I at certain times I do also have negative cash balances in interactive broker, but I also know that the kind of returns that I can get from my options trading is more than enough to cover the interest. So I do it with very, very clear understanding what am I getting myself into, what kind of risk am I subjecting myself to, and whether or not I can take that kind of risk. But I would say that you need to be very, very going money to the platform. Okay, ideally is not to. But if you have to, know why, and try not to owe it for too long.
Understand.
As far as possible, once your position becomes profitable, quickly sell it, close it, get back the cash, and then you can sleep better. So that's my advice.
Okay, thank you, Siong.
Yep.
Elsie, I hope that answers the question. Don't get into that situation if possible. Yeah, okay. So let me see. Marcus' question is also regarding the minimum capital, so that's already covered. Okay, Daniel has a follow-up question. He's asking whether you use delta to determine the strike price. So just now you said you don't, right?
I don't. Except for except when I do buy call. Okay, that is the only time where I use delta. If I do leap calls, that means if I buy a call, if I buy a call like maybe 2 years ahead, then I'll use delta, and I use the criteria of 0.8 delta. But that is the only time that I use delta. But the rest of the Greeks I don't use, because my perspective is very simple. Keep things simple.
Understand.
That's why I use only TA and all this to sort of, okay, may not be right. Some of you may be purists, maybe more inclined to say that I want to be kiasu, kiasi, kiasui. I want to consider all the delta, gamma, theta, vega, whatever. They want to factor in all this, but to me is too much things to think about, too much things to consider already. So
understand.
I just want to keep it simple. Yeah.
So delta 80 is a stock replacement.
Yeah. For example, if I want to do a buy call, right? Say for example, Apple, my favorite example of buying a lead call. So if let's say I want to buy a lead call, 3 years 2 years or 3 years from now. Okay, so this is called, I will look at delta, 0.8 delta. So I will choose maybe 100, I will choose a strike price 145 as the strike price to enter into a buy call trade for Apple, expiring 18th of December 2026. So this is the only time where I use the delta, and it's for buy call. But for sell put, sell calls, I don't use delta.
Understand. Okay, let me move on to the next question. It comes from May. May is asking whether you sell index options like SPX.
I used to do QQQ and SPY. SPX is a bit expensive. SPX usually is for institutions because SPX is for 5,000, right?
Yep.
SPY is 10% of it, so 500. Yeah. So I think for retail investors, good enough to stick to SPY and QQQ. These are the two indexes that I used to play. Nowadays, I don't play as much because I get better premiums from stocks like the more volatile stocks like your Tesla, your Coinbase, the Roku's, and that kind. Yeah.
Understand. Okay, May, I hope that answers your question. Let me see. Okay, just now you also answered L's question, which is whether you look at the Greeks. So you don't, except for leaps. Let me see. Okay, minimum. Okay, Flo is asking, I think that's Florence.
Okay. Yep.
Flo is asking for ARK is still not out of the woods yet, and sell call premium is low. What would you do? Yeah, ARKK, correct.
So I'm assuming that you. I'm going to make the assumption that Flo has some shares, owns some shares of ARKK, right? Okay, maybe I'll use IB lah. IB is easier to see, I feel. So let's assume, Flo, you also like me, you're like me, you have some holdings of ARKK. Okay, so you can consider if you want to do sell call this week, probably you won't get much. And assuming what is let's assume that your average price, the price that you acquired ARKK is around this $45. So if I were to look at May 10th expiry, next Friday expiry, if your objective is really to try to get back the cash, maybe you can consider. Okay, the market data is not fully loaded up yet. You can consider trying to sell closer to your what do you call average price, or selling close to at the money, and you still get not too bad the premiums. Okay, the data is not loaded up yet, so you can't really see.
The last close is 89 cents.
89 cents. So
yeah, last close.
Yep, the last close is 89 cents. So assuming that you can put in a trade at 89 cents, or let's say 85 cents. So maybe that would be something you may want to consider. Or you can, if you are gunning for higher premium, you can go for May 17. But then again, it means that you got to wait longer for a chance to offload your stock. Okay, so if your objective is really to try to get back cash sooner rather than later, you could think of what is the opportunity cost, or what is the trade-off. If you're really very anxious to get back the cash, then either sell it, put in the order to sell, and guess 100. Let's say you want to put in order to sell at, you want to get back your capital, plus with a little bit of capital gains. For instance, maybe you can put in order to sell, go to cancel, and then set it to outside our regular trading hours, and then put in the order, for instance. Okay, so that is directly selling away the stock that you own. Or if you want to go via the options route and earn a little bit of premium in the process, you can actually again, short of using the word desperate, which is may not come across as very positive. If let's say you're anxious to sell away as soon as possible rather than having to delay to next week, you can still consider selling it for this Friday expiry. Sell it close to at the money or close to your average price, whether it's 46 or 45.50. Put in the order, and one contract which is 100 shares, assuming you have 100 shares, then put in the order and sell it away as early as possible, and avoid any complications, or and you can sort of sleep better after this Friday if let's say up continues on this upward trajectory in terms of the share price. If this Friday the share price is still below your strike price, that means your option doesn't get assigned. You continue to hold on to the stock, then
Doesn't get caught away.
doesn't get called away, then you repeat the process again next week. Then you got one more, it means that you have one more week to generate premium for yourself.
Right.
Yeah.
Okay, Flo, I hope that answers your question. And that would be the last question for now and for this session. And maybe Siong Yo, if anyone is interested to learn your style of doing the wheel strategy, how would they go about doing it?
Okay, thank you for offering this opening this opportunity for us. So for your tribe members who are interested to keep themselves updated of our next options event, they can actually scan this QR code and then fill in the details. We're not asking a lot of details, just some basic contact information, and then we'll just loop you in and inform you if when we are organizing our next options event. And I also maybe just take this opportunity to also share what I do with my business partners. My business partner is basically Imin. What we're trying to do is we are trying to create this movement, okay, in Singapore. And this movement is what we call wealthy mice. So it's a play of word, wealth and optimizing your wealth. So we believe that investing is not just a one-trick pony. It's not just relying on stock investing. There's also other tools that we can actually bring in as part of the overall mix. So what do I mean? As Singaporeans, property is definitely is something that we do anyway, right? We need to have a roof, and property is something that we can actually use as an instrument to build our wealth. Then we have the other aspect, which is financial planning or protection. So we like to use this catchphrase PPIG for FREE: property protection, property income, and growth investing. Growth investing is what we've been talking about, options, day trading, and all this. Okay. Then PPIG, that's PPIG for FREE. FREE is for being financially ready for extraordinary experience. So what we're trying to share with the audience here is think about how you want to approach your own financial objective. Yes, options investing, definitely. I mean, we're here to learn, and I hope that I've been able to share some nuggets of uh, of some nuggets with you folks that you can sort of take away with you and consider whether or not it actually works for you. But if you want to have something bigger, it could be a more holistic way of looking at your financially proving yourself or bring yourself to the next level. The next level we like to call it FRE level, free, financially ready for extraordinary experience. What extraordinary experience, you ask, is for you to define. If your extraordinary experience is really about traveling the world with your spouse, with your family, so be it. If your extraordinary experience is like me, I aim to start a cat shelter for senior cats, for so that they have the means to be able to live a good life after years of neglect, and then to go away peacefully. Yeah. So that's my extraordinary experience. Every one of us are unique individuals. You have your own. So please, if you like, you can follow us and then be also updated on this kind of not just option investing, but also other routes towards financial proofing. And that's all I just want to say. I don't want to take too much of your time as well. So thank you, Richard, for your for giving us the opportunity to share in this awesome tribe of yours. So I'll hand it back to you, Richard.
Thank you, Siong Yo. No problem. Very unique goals that you and Emin have.
Yes.
So, for those of you who are watching this on the webinar or the YouTube, if you'd like to be kept posted of what Siong Yo and his partners are doing, please scan the QR code and fill up the form. And whenever they have the next run of their offerings, then they will be keeping you posted directly. Right, so that's, I got it right? Okay, good.
Yes.
So I hope this session has given all attendees a glimpse of how a practitioner does his trade day in and day out. And like what Siong Yo say, he only worked like one day a week
Monday,
to place the trades, right?
Monday do
So
all the work. I pangkang for the rest of the week.
right. But of course, behind that one day a week, there is a lot of experience, a lot of process that he have, a lot of tuition fee that he has already paid. So for those of you who wants to cut short your tuition fee process and payment, can approach Siong Yo for help lah. So that's where he will coach his students on what to do, right? Okay,
Yes,
with that, I thank everyone for your attendance tonight. And Siong Yo, any last words for the attendees?
Actually don't have. I do have one favorite phrase. You can actually reach out to me if you like. This is my personal email as well as my Facebook. The phrase I like to typically leave with participants is this: imagine this scenario where you meet your future self, and then what would you like your future self to say to you? Will your future self say, "Hey, you be sweet leh, how come you never start early, never invest early? Now I'm suffering because you never take action." Or would you like your future self to say, "Thank you for taking action. Do something for your future you today, so that the future you can thank you for it." So that is my last words that I like to just kind of share.
Right.
Hopefully it makes sense. Yeah.
Wow, this one deep thoughts. Thanks, Siong Yo. Thank you for your time. And
thank you
thanks,
too,
attendee, for all your time as well. And we'll see you at the next event. Good night.
Thank you. Good night, everybody. Take care.